deductions. So firstly, we should know the meaning of deductions. From the gross total income, GTI, so computed, certain deductions under Chapter 6A of Income Tax Act can be claimed. These deductions are on account of savings in approved channels, tax holiday, exports, approved donations, other incentives and income from various approved investment channels and are covered under Sections 80C to 80U. Section 80A lays down following general rules for claiming deductions under Chapter 6A. While computing total income of the assessee, the deductions specified in Section 80C to 80U shall be allowed. Total deductions US 80C to 80U shall be limited to the amount of the gross total income of the assessee. In other words, the deductions allowable cannot result in a negative income. Thus, if GTI is found to be net loss, there is no question of any further deductions under these provisions. If in computation GTI of association of persons or body of individuals any deduction is allowed, US 80G, 80GGA, 80GGB, 80GGC, 80HH, 80HHA, 80HHB, 80HHC, 80HHD, 80I, 80IA, 80IB, 80J or 80JJ, no deduction under the same sections shall be allowed while computing total income of member of AOP or BOI. However, above provision is not applicable to company and its shareholders because the member and the company both enjoy separate identities. Deductions under this Chapter 6A are allowed only if assessee claims them. If no such deduction is claimed, assessing officer is not bound to allow any such deduction. However, any such omission to claim may be made good at the appellate stage. Where an assessee claims some deductions under this chapter, it shall be his duty to place all relevant material before the statutory authority. In other words, he must be in a position to satisfy the said authority that he was entitled to obtain the deductions in accordance with the provisions of taxing statute. In other words, the deductions allowable cannot result in a negative income. Thus, if GTI is found to be net loss, there is no question of any further deductions under these provisions. After studying this lesson, you should be able to deductions under Chapter 6A of Income Tax Act, basic rules of deductions, deductions in respect of life insurance premium, deferred annuity, contributions to provident fund, subscription to certain equity shares or debentures, etc. Section 80C. Deduction in respect of contribution to certain pension funds. Section 80CCC. Deduction in respect of contribution to pension scheme of central government or any other employer. Section 80CCD. Limit on deductions under sections 80C, 80CC and 80CCD. Section 80D, Section 80DD, Section 80DDB, Section 80E, Section 80G, Section 80GG, Section 80GGA, Section 80GGB, Section 80GGC, Section 80IA, Section 80IAB, Section 80IB, Section 80IC, Section 80ID, Section 80IE, Section 80JJA, Section 80JJAA, Section 80LA, Section 80QQB, Section 80RRB, and Section 80U. Rebates and relief. Now let's discuss deductions under Section 80C. It can be understood under following heads: Section 80C, Section 80CCD, Section 80CCE. Section 80C of the Income Tax Act is the section that deals with these tax breaks. It states that qualifying investments up to a maximum of rupees 1 lakh are deductible from your income. This means that your income gets reduced by this investment amount up to rupees 1 lakh and you end up paying no tax on it at all. This benefit is available to everyone irrespective of their income levels. So let's understand the qualifying investments first. Provident Fund (PF) and Voluntary Provident Fund (VPF). PF is automatically deducted from your salary. Both you and your employer contribute to it. While employer's contribution is exempt from tax, your contribution is counted towards Section 80C investments. You also have the option to contribute additional amounts through voluntary contributions (VPF). Current rate of interest is 8.5% per annum and is tax-free. Public Provident Fund (PPF). Among all the assured returns small savings schemes, Public Provident Fund is one of the best. Current rate of interest is 8% tax-free and the normal maturity period is 15 years. Minimum amount of contribution is rupees 500 and maximum is rupees 70,000. A point worth noting is that interest rate is assured but not fixed. Life insurance premiums. Any amount that you pay towards life insurance premium for yourself, your spouse or your children can also be included in Section 80C deduction. Please note that life insurance premium paid by you for your parents, father, mother or both, or your in-laws is not eligible for deduction under Section 80C. If you're paying premium for more than one insurance policy, all the premiums can be included. It is not necessary to have the insurance policy from Life Insurance Corporation. Even insurance bought from private players can be considered here. Equity Linked Savings Scheme (ELSS). There are some mutual funds schemes specially created for offering you tax savings, and these are called Equity Linked Savings Scheme or ELSS. The investments that you make in ELSS are eligible for deduction under Section 80C. Home Loan Principal Repayment. The equated monthly installment EMI that you pay every month to repay your home loan consists of two components, principal and interest. The principal component of the EMI qualifies for deductions under Section 80C. Even the interest component can save you significant income tax, but that would be under Section 24 of the Income Tax Act. Please read Income Tax Benefits of a Home Loan or Housing Loan or Mortgage, which presents a full analysis of how you can save income tax through a home loan. Stamp duty and registration charges for a home. The amount you pay as stamp duty when you buy a house and the amount you pay for the registration of the documents of the house can be claimed as deduction under Section 80C in the year of purchase of the house. National Savings Certificate (NSC). National Savings Certificate is a 6-year small savings instrument eligible for Section 80C tax benefit. Rate of interest is 8% compounded half-yearly. That is, the effective annual rate of interest is 8.16%. If you invest rupees 1,000, it becomes rupees 1,601 after 6 years. The interest accrued every year is liable to tax, but the interest is also deemed to be reinvested and thus eligible for Section 80C deduction. Infrastructure bonds. These are also popularly called infra bonds. These are issued by infrastructure companies and not the government. The amount that you invest in these bonds can also be included in Section 80C deductions. Tax saving fixed deposits, FDs of scheduled banks with tenure of 5 years are also entitled for Section 80C deduction. Section 80CCC stipulates that an investment in pension funds is eligible for deduction from your income. Section 80CCC investment limit is clubbed with the limit of Section 80C. It means that the total deduction available for 80CCC and 80C is rupees 1 lakh. This also means that your investment in pension funds up to rupees 1 lakh can be claimed as deduction US 80CCC. However, as mentioned earlier, the total deduction US 80C and 80CCC cannot exceed rupees 1 lakh. The deduction under section 80CCD is allowed to an assessee who is an individual and who is employed by the central government or any other employer. The deduction is allowed on account of any amount not exceeding 10% of salary of the previous year paid or deposited by the employee in his account under the notified pension scheme. Any amount contributed by the employer to such pension scheme not exceeding 10% of the salary of the employee. As per limits under section 80 CCE, the aggregate amount of deductions under section 80C, section 80 CCC and section 80 CCD shall not in any case exceed. Now let's discuss deductions under section 80D. Section 80D, section 80DD and section 80DDB. Section 80D stipulates deduction in respect of medical insurance premium, Mediclaim, paid to keep in force insurance by individual either on his own health or on the health of spouse, dependent parents and children, on HUF on the health of any members of the family. The deductions available are: in computing the total income of an assessee being an individual or a Hindu undivided family, there shall be deducted such sum as specified in subsection 2 or subsection 3, payment of which is made by any mode other than cash in the previous year out of his income chargeable to tax. Where the assessee is an individual, the sum referred to in subsection 1 shall be the aggregate of the following, namely, the whole of the amount paid to effect or to keep in force an insurance on the health of the assessee or his family as does not exceed in the aggregate 15,000 rupees. The whole of the amount paid to effect or to keep in force an insurance on the health of the parent or parents of the assessee as does not exceed in the aggregate 15,000 rupees. Where the assessee is a Hindu undivided family, the sum referred to in subsection 1 shall be the whole of the amount paid to effect or to keep in force an insurance on the health of any member of that Hindu undivided family as does not exceed in the aggregate 15,000 rupees. Where the sum specified in clause A or clause B of subsection 2 or in subsection 3 is paid to effect or keep in force an insurance on the health of any person specified therein and who is a senior citizen, the provisions of this section shall have effect as if for the words 15,000 rupees, the words 20,000 rupees had been substituted. The insurance referred to in this section shall be in accordance with a scheme made in this behalf by the General Insurance Corporation of India formed under Section 9 of the General Insurance Business Nationalization Act 1972, 57 of 1972 and approved by the central government in this behalf. Any other insurer and approved by the Insurance Regulatory and Development Authority established under subsection 1 of Section 3 of the Insurance Regulatory and Development Authority Act 1999. Under the provisions of Section 80DD of the Income Tax Act 1961, an assessee who is resident in India being an individual or a Hindu undivided family is allowed a deduction of rupees 15,000 for expenditure incurred in respect of handicapped dependents subject to the following conditions. The handicapped dependent is a relative of the assessee and is not dependent on any person other than the assessee for his support or maintenance. He is suffering from a permanent physical disability including blindness or mental retardation and the same is certified by a physician, psychiatrist, etc. working in government hospital. The disability has the effect of reducing considerably such person's capacity for normal work or engaging in a gainful employment or occupation. The assessee has incurred any expenditure for medical treatment including nursing, training and rehabilitation of the handicapped dependent. Any individual or a Hindu undivided family HUF can claim deductions under Section 80 DDB for certain diseases. However, you have to be a resident or non-resident NRI cannot claim this deduction. The diseases mentioned in Rule 11DD of the Income Tax Act are covered under this section. These diseases are neurological disease, where the disability level has been certified as 40% or more, malignant cancers, full-blown acquired immunodeficiency syndrome, AIDS, chronic renal failure, hematological disorders. Any amount paid for the medical treatment is deductible from your income subject to a cap of Rs 40,000. If the amount is spent for a senior citizen aged 65 years or more, the upper limit is higher, Rs 60,000. However, if you get the amount reimbursed by your employer or you get the amount from an insurer, you would not be able to claim deduction under Section 80 DDB. If you get partial amount from an insurance company or get a partial amount reimbursed by your employer, the balance can be claimed as deduction from your. Now before we go further, let's discuss deductions. Section 80E, which covers deductions for interest on education loan taken for self and relatives. The deduction under Section 80E is available to individual, not to HUF or other type of assessee. The amount of interest paid is eligible for deduction, and moreover there is no cap on the amount to be deducted. Deduction available if interest is being paid during the previous year and was paid out of income chargeable to tax, which means if repayment is made from income not chargeable to tax, then deduction will not be available. Loan should have been taken for the purpose of pursuing higher studies of the individual, spouse, children of the individual, or of the student of whom individual is legal guardian. Higher studies means full-time studies for any graduate or postgraduate course in engineering, medicine, management, or for postgraduate course in applied sciences or pure sciences, including mathematics and statistics. Deduction shall be allowed in computing the total income in respect of the initial assessment year and 7 assessment years immediately succeeding the initial assessment year or until the interest is paid by the assessee in full, whichever is earlier. Now let's discuss deductions under Section 80G. Donations paid to specified institutions qualify for tax deduction under Section 80G, but is subject to certain ceiling limits. Based on limits, we can broadly divide all eligible donations under Section 80G into 4 categories. 100% deduction without any qualifying limit. X, for example, Prime Minister's National Relief Fund. 50% deduction without any qualifying limit. X, for example, Indira Gandhi Memorial Trust. 100% deduction subject to qualifying limit. X, for example, an approved institution for promoting family planning. 50% deduction subject to qualifying limit. X, for example, an approved institution for charitable purpose other than promoting family planning. Any individual can claim the deduction US 80GG for rent paid, irrespective of whether you are a salaried individual or a business person. You can claim deduction under Section 80GG. The amount allowed as deduction is the minimum of the following: rent or lease amount paid less 10% of your total income, Rs 2,000 per month, 25% of your total income. You cannot claim deduction US 80GG if you receive HRA from your employer, you or your spouse or your minor child owns a house at the place where you normally stay, work, or conduct business. You are a member of a Hindu undivided family and the HUF owns a house at the place where you normally stay, work, or conduct business. You own a house at any other place and claim concessions of self-occupied house property for that. Section 80GGA describes deductions in respect of certain donations for the scientific research or rural development. In computing the total income, an assessee will be allowed deduction for the sum paid in the previous year. To a specific research association or university, college, or other institution for undertaking of scientific research and approved for the purposes of Section 35, Part 1, Part 3. To a university, college, or other institution to be used for research in social science or statistical research and approved for the purposes of Section 35, Part 1, Part 3. To an association or institution undertaking any program of rural development to be used for carrying out any program of rural development approved for the purposes of Section 35 CCA. To an association or institution for the training of persons for implementing programs of rural development, provided that the assessee furnishes the certificate referred to in Section 35 CCA Part 2 or 35 CCA Part 2A from such association or institution. To a public sector company or a local authority, or to an association or institution approved by the National Committee for carrying out any eligible project or scheme. To a rural development fund set up and notified by the central government to the National Urban Poverty Eradication Fund set up and notified by the central government for the purposes Section 35 CCA Part D Part 1. ATGGC provides deduction in respect of contributions given by any person to political parties. Deduction is allowed to any person except local authority and every artificial juridical person wholly or partly funded by the government for any amount contributed by him in the previous year to a political party registered under Section 29A of the Representation of the People's Act 1951. Now let's discuss deductions under Section 80I. They can be discussed under heads, namely Section 80IA, Section 80IAB, Section 80IB, Section 80IC, Section 80ID, Section 80IE. 80IA gives deductions in respect of profits and gains from industrial undertakings or enterprises engaged in infrastructure development, etc., where the gross total income of an assessee includes any profits and gains derived by an undertaking or an enterprise from any business referred to in subsection 4, there shall, in accordance with and subject to the provisions of this section, be allowed in computing the total income of the assessee a deduction of an amount equal to 100% of profits and gains derived from such business for 10 consecutive assessment years. The deduction specified in subsection 1 may, at the option of the assessee, be claimed by him for any 10 consecutive assessment years out of 15 years beginning from the year in which the undertaking or the enterprise develops and begins to operate. This section applies to an undertaking referred to in Clause 4 of subsection 4, which fulfills all the following conditions, namely, it is not formed by splitting up or the reconstruction of a business already in existence. It is not formed by the transfer to a new business of machinery or plant previously used for any purpose. This section applies to, it is owned by a company registered in India or by a consortium of such companies. It is entered into an agreement with the central government or a state government or a local authority or any other statutory body for developing or operating and maintaining or developing, operating and maintaining a new infrastructure facility. It has started or starts operating and maintaining the infrastructure facility on or after the first day of April 1995. Where any amount of profits and gains of an undertaking or of an enterprise in the case of an assessee is claimed and allowed under this section for any assessment year, deduction to the extent of such profits and gains shall not be allowed under any other provisions of this chapter under the heading C. The central government may, after making such inquiry as it may think fit, direct by notification in the official gazette that the exemption conferred by this section shall not apply to any class of industrial undertaking or enterprise with effect from such date as it may specify in the notification. 80IAB gives deductions in respect of profits and gains by an undertaking or enterprise engaged in development of special economic zone, where the gross total income of an assessee, being a developer, includes any profits and gains derived by an undertaking or an enterprise from any business of developing a special economic zone, notified on or after the first day of April 2005 under the Special Economic Zones Act 2005. There shall, in accordance with and subject to the provisions of this section, be allowed, in computing the total income of the assessee, a deduction of an amount equal to 100% of the profits and gains derived from such business for 10 consecutive assessment years. The deduction specified in subsection 1 may, at the option of the assessee, be claimed by him for any 10 consecutive assessment years out of 15 years, beginning from the year in which a special economic zone has been notified by the central government. 80IB gives deduction in respect of profits and gains from certain industrial undertakings other than infrastructure development undertakings, where the gross total income of an assessee includes any profits and gains derived from any business referred to in subsections 3 to 11 and 11A, such business being hereinafter referred to as the eligible business. There shall, in accordance with and subject to the provisions of this section, be allowed, in computing the total income of the assessee, a deduction from such profits and gains of an amount equal to such percentage and for such number of assessment years as specified in this section. The amount of deduction in the case of an industrial undertaking shall be 25%, or 30% where the assessee is a company, of the profits and gains derived from such industrial undertaking for a period of 10 consecutive assessment years. The amount of deduction in the case of an industrial undertaking in an industrially backward state specified in the 8th schedule shall be 100% of the profits and gains derived from such industrial undertaking for 5 assessment years, beginning with the initial assessment year and thereafter 25%. The amount of deduction in the case of the business of a ship shall be 30% of the profits and gains derived from such ship for a period of 10 consecutive assessment years, including the initial assessment year, provided that the ship is owned by an Indian company and is wholly used for the purposes of the business carried on by it. The amount of deduction in the case of any hotel shall be 50% of the profits and gains derived from the business of such hotel for a period of 10 consecutive years, beginning from the initial assessment year, as is located in a hilly area or a rural area or a place of pilgrimage or such other place as the central government may, having regard to the need for development of infrastructure for tourism in any place. 30% of the profits and gains derived from the business of such hotel as is located in any place other than those mentioned in subclause A for a period of 10 consecutive years, beginning from the initial assessment year if such hotel has started or starts functioning at any time during the period beginning on the first day of April 1991 and ending on the 31st day of March 1995. The amount of deduction to an undertaking which begins commercial production or refining of mineral oil shall be 100% of the profits for a period of 7 consecutive assessment years, including the initial assessment year. Section 80 IC represents deduction in respect of certain undertakings or enterprises in certain special category states. All assessees deriving income from an undertaking or enterprise situated in special category states which begin manufacturing or production between specified dates are eligible for deductions. The amount of deductions is 25% to 100% of profits. 80 ID gives deduction in respect of profits and gains from business of hotels and convention centers in specified area. all assessee engaged in the business of hotel or engaged in the messiness of building, owning and operating a convention center and hotels located in specified districts having a World Heritage Site in India are eligible for such deductions. The amount of deduction is 100% for 5 consecutive assessment years. 80IE provides deduction in respect of profits and gains from an undertaking in any of the northeastern states. Assessees that have begun or begin to manufacture or produce eligible articles or things or undertake substantial expansion or carry on any eligible business on or after 1 April 2007 is eligible for deduction. The amount to be deducted is 100%. Now let's discuss deductions under Section 80J and L. Section 80JJA is applicable where gross total income of an assessee includes any profits and gains derived from the business of collecting, processing, or treating of biodegradable waste for generating power or producing biofertilizers, biopesticides, or other biological agents, or for producing biogas or making pellets or briquettes for fuel or organic manure. The whole of the profits and gains of the above activities shall be deductible for a period of 5 consecutive assessment years, beginning with the assessment year relevant to the previous year in which such business commences. 80JJA, which provides deduction in respect of profits and gains from business of collecting and processing of biodegradable waste, is applicable to all assessees for the amount of 100% of the profit for 5 years. 80JJAA Rule 19AB gives deduction in respect of employment of new workmen. Only Indian companies can access to this deduction with amount of 30% of additional wages for 3 years. 80LA provides deduction in respect of certain income of offshore banking units. It is applicable to only scheduled banks owning e-taxindia.org offshore banking units in a special economic zone. The amount of deduction is 100% for first 5 years and 50% for the next 5 years. Now let's discuss deductions under Section 80QQB, RRB and U. 80QQB states deduction in respect of royalty income, etc. of authors of certain books other than textbooks. Individuals who are residents in India and are authors can avail this deduction. Actual income or rupees 3 lakh, whichever is less, is deductible here. 80RRB gives deduction in respect of royalty on patents and is applicable to individual who is resident in India and is a patentee. The amount of deduction is 100% of such income or rupees 3 lakh, whichever is less. As per Section 80U, a resident individual who at the end of the PY is suffering from a permanent physical disability including blindness or is subject to mental retardation and which has the effect of reducing substantially his capacity for normal work or engaging in a gainful employment or occupation, he is entitled to a deduction of rupees 50,000. A higher deduction of rupees 75,000 is allowed in respect of a person with severe disability, that is, having any disability over 80%. The deduction will be allowed only if such individual produces before the assessing officer in respect of the first assessment year for which deduction is claimed a certificate in this regard from a physician, a surgeon, an oculist, or a psychiatrist, as the case may be, works in a government hospital. Now let's discuss rebates and penalties. A relief comprises a rebate from the tax determined on the total income. Unlike a deduction which goes to reduce the figure of total income, a relief goes to reduce the amount of tax determined on the total income. Where an assessee is in receipt of a sum in the nature of salary being paid in arrears or in advance or is in receipt in any one financial year of salary of more than 12 months or a payment which under the provisions of Clause 3 of Section 17 is a profit in lieu of salary or is in receipt of family pension being paid in arrears, due to which his total income is assessed at a rate higher than that at which it would otherwise have been assessed. The assessing officer shall, on an application made to him in this behalf, grant such relief as may be prescribed. Rule 21AA and Form number 10E provides the framework for claiming relief US 89. Rebate to be allowed in computing income tax Section 87. In computing the amount of income tax on the total income of an assessee with which he is chargeable for any AY, there shall be allowed from the amount of income tax the deductions in accordance with and subject to the provisions of this chapter. The aggregate amount of deduction under this lesson shall not exceed the amount of income tax on the total income of the assessee. Now let us check if you have understood the various concepts discussed in this lesson clearly. The deductions allowable can result in a negative income, that is, if GTI is found to be net loss, any further deductions under these provisions are still done. Right or wrong? Right. Section 80C of the Income Tax Act is the section that states that qualifying investments up to a maximum of Rs 1 lakh are deductible from our income. Right or wrong? Right. Donations paid to specified institutions qualify for tax deduction under Section 80E. Right or wrong? Wrong. 80IA gives deductions in respect of profits and gains from industrial undertakings or enterprises engaged in infrastructure development. Right or wrong? Right. Now let's revise what we have studied till now. Deductions mentioned in the lesson are in relation to various investments and payments and also deduction in respect of certain income. The purpose of these deductions is to encourage savings, industrialization, foreign earnings, and to assist the taxpayers in meeting the business essential expenditure. Special economic zone are the designated area in a country that possesses special economic regulations that are different from other areas in the same country. The area has an environment conducive to foreign direct investment. Deferred annuity is an annuity that delays income payments until the holder chooses to receive them.